Hello, and thanks for joining us for MarketBeat Monday. We are so glad to have you with us. As always, we have our MarketBeat analysts, Chris Markoch and Thomas Hughes with us today to break down some of the biggest market movers. If you've not joined us for MarketBeat Monday before, this is a live look at stocks that you want us to talk about. You can put a stock ticker in the chat, and I'll try to get to as many as we can today. Chris and Thomas give us a brief overview. They have a cold look. They have not practiced any of this, so they'll do a cold look and a cold analysis really quick on some of the stocks you want to talk about today. If you really want to get your stock covered, again, usually we have way more stocks in the chat than I can possibly cover. You can do a super chat too. If you've not tried that before, it's a great way to make sure to get my attention and get your stock covered today. So Chris and Thomas, let's get started. A lot to talk about and a lot of green. It's nice to see that we actually have some green in that heat map today, and it's mostly green. There's a few areas of red, but let's talk about what's moving that market a little more green today, Thomas.
Well, there's a lot of hope that there's going to be a resolution to the Iran conflict pretty soon. Looking at the charts, the market is ready to rip higher as soon as it gets good news. So just a matter of when it comes. Hopefully it'll come pretty soon. I think that would be good news for everybody. But right now it looks like with the earnings outlook being as robust as it is, this market is totally set up to hit a new all-time high this year.
Are you confident, Thomas and Chris? Chris, I'll go to you next. Are you confident that this turnaround is lasting, or is this another spike of volatility just in the opposite direction because of all the volatility and changes we've seen in the last few weeks?
My outlook is like this, Bridget. I think there's a long-term bull case for the market that's pretty clear from the data. We saw a very strong jobs number on Friday. Earnings have been good, and I think as long as you don't get inflation numbers this week that are completely out of whack, I think people are expecting them to be higher, but as long as we don't see something that's incredibly out of whack, I think the overall fundamental case for a long, for a bull market is still there. The overhang on the market right now is the Iran situation, and I don't think it's even necessarily completely about oil. I think it's just about, there's a lot of uncertainty. There's a lot of, what does this mean? How long are we going to, it's just uncertainty, and investors don't like uncertainty. They don't like what it potentially means. But I think, again, I don't disagree with Thomas. I think the long term, everything's there in place for a much higher high by the year end. But the Iran war is it's a counterweight, and it's a heavy one.
Right. I'd forgotten about the NFP last week. That was a pretty hot number.
Yeah.
So really, fundamentally,
really hot number.
Economy is good. Labor markets are good. Consumer is good. Certainly some consumer headwinds and some concerns. Yeah. But the data looks good. And it's all also being reflected in the earnings outlook. The earnings outlook is, to me, is as robust as it could be. We're looking at high teens growth, acceleration sequentially from quarter to quarter. The estimates are rising. The way the trends have been going, we can expect most companies to outperform their expectations and for the results to actually be better than expected. Companies like NVIDIA are going to be giving hot guidance, so maybe the outlook is also going to improve. So it looks to me right now that we have some pretty solid tailwinds in place to help support this outlook that I've given of this market hitting new highs. And I keep seeing lots of big ratings firms reaffirming their year-end targets, which are like in the 74 to 7,600 range, which is right in line with these targets that I've been calling out on my previews for over a year, I think, because we've been watching this for some time. This market is in an uptrend. It's been pretty predictable as far as like where it's going between the different big pivot points. There's been a little bit of uncertainty and some volatility, but generally speaking, it's a good, strong uptrend, and it looks like it's still going to go higher.
All right, well, let's get into some of the specific stocks. We already have quite a few different names coming in. Thomas, the first one I'm going to have you look at is MARA, M-A-R-A. And Chris, let's start with you with RIG. Yeah. This is kind of in that oil field that we were talking about, which of course has been such a hot sector recently. So let's look at RIG, Chris.
Yeah. I think there's a lot of people wondering how high can it go, or can it go any higher? It's up over 200% in the last year, and a lot of that, not all of it, but a lot of it's come just in 2026. It's up 58% for the year. This is an oil services company, so you would expect that at times like this, it's going to be moving higher. It specializes in mobile drilling units, including deep water drilling. So that's an area that we've seen with other stocks is an area that's getting a lot of traction. Right now, let me see. Stock is trading a little bit above the consensus target right now. And let me look at the chart again here. Yeah, so it had a pretty down day right at the end of March, and it hasn't quite recovered that momentum yet. So this may be an opportunity for some investors. RSI looks kind of neutral right now, but the MACD is looking a little bit bearish, so we might be running out of some steam here. I think a lot of from what I'm seeing with the areas that rig operates under, and again, I'm not that familiar with it, but I'm not necessarily thinking this is a Strait of Hormuz play here. So investors may want to wait for a little bit of a pullback here based on what I'm seeing in the chart. But certainly if you believe that oil prices are going to stay elevated, and when I say elevated in the case of rig, I mean, it can still be in the $80, $90 range. It doesn't even have to be over $100 range. Then rig is going to be a company that's going to be a benefactor for that.
Yeah, I'd love to, for either Thomas or Chris, either of you can answer this, but not just this specific stock, but oil stocks in general. Do you think that now is a time as an investor that you'd be interested in looking at oil stocks? Or do you think that this is a time to be staying away from them because of all of the huge interest because of the headlines with what's going on with the conflict right now?
I might be hesitant to get into oil stocks because I think that there's risk for the bottom to fall out of the market. Right now it's elevated and there's certainly risk for it to stay high, but there's equally number of signs pointing to, one, the conflict ending, but also that more traffic is getting through than what some earlier reports have been saying. So with all these things in play, it's hard to say anything for sure, except that volatility is going to be in the oil market for a little while.
All right, very good. Well, Chris, I'm going to have you look up ARDX next. That's one of the early stock tickers that came in on the chat. Thomas, let's get over to MARA. What have you learned about that company?
Well, this one's kind of interesting. It's a Bitcoin company, Bitcoin treasury, has been holding lots of Bitcoin, but is now making a pivot away from Bitcoin. It's trying to sell its holdings, liquefy that, pay down debt, and then pivot to AI. This company has data centers. It's got compute infrastructure, so it can do this. So there is some risk in the pivot. It's got the market concerned. Short interest is way up there. So right now, what I see is potential for this market to remain under pressure and potentially move lower in the near to midterm as it affects this shift. But I think if it shows some signs of traction, then it could rocket higher pretty quickly. So within that, put it on a watch list, look and see where it goes, wait for the news to come out, and see what the charts say. But right now, this one looks like it's kind of risky for bulls. I would say that it's more likely to move lower in the near term than it is to move higher.
Yeah, one thing I've got up right now, Thomas, is that the last earnings was a huge miss, obviously burning a lot of money right now. And if Bitcoin is the business, it's been a rough quarter to be in Bitcoin for sure.
Oh, well, right. Bitcoin's down like 40% from its high, 50% almost. So it's anybody that bought Bitcoin up at those levels is certainly hurting. We saw that in GameStop's report. It's excuse me, unrealized losses are pretty big in its Bitcoin holdings. Same thing's happening in Mara. So we just have to wait and see. It's going to be able to sell. It's going to be able to make money, but how much money it makes, and if it's able to actually turn the company around into an AI powerhouse, that'll be quarters in the future. But before we know that answer.
Yeah, well, the names that we get on this channel all the time that are in this similar field would be IREN and Applied Digital, APLD, that have both kind of done this thing. They started as those Bitcoin companies, and they've made the turnaround and are actually close to, if not already, becoming profitable. They've got some real contracts underway as kind of data center space for rent. Mara looks like it might have had some analysts that were expecting a huge turnaround like that. You look at the analyst price targets, it originally had some really high estimates, up as high as $30 $30. But I think in recent weeks and months, it looks like some of those targets have been going down, although that $30 price target was just back in November. So why do you think there's so many bullish analysts on this theory?
Great. Yeah, I mean, it's hope, I guess, but really the trend is down. They're kind of losing confidence or faith in the strategy. I think a lot of people are starting to, not really view the Bitcoin treasury strategy as a good one. And so now they're going to be in wait and see mode. I'd be more interested in the ratings that come up than the ones that have been issued in the past, just because the company is in that transition right now.
All right, that's a good look at Mara. I'm going to have you look up Credo next, Thomas. CRDO. Okay, ARDX. What is this one, Chris?
So this is a biotech company. They've got some products in. They've got a couple of drugs that are in market right now, and the company is generating pretty significant revenue now. Year over year, the revenue has been very strong. They're not yet profitable. That's part of the issue here that I'm thinking is going on with the stock. Let's see. Analysts love it. The consensus price target's $15.70, which is a whopping 163% upside. I think one of the issues going on here is stock is down about 3.5% in the last month, and that's after a 31. It's up 31% in the last year. One of the issues that I'm seeing with it is that the company believes it's got enough cash on hand to get the candidates in their pipeline advanced through this year, but at the same time they're also expecting pressure on margins. So I think it's the idea of you're probably going to see some more of this pattern of maybe higher revenue growth but not profitability yet, and I think that's what's weighing on the. I think that might be weighing on the stock right now, and maybe why it's pulling back a little bit. One thing that I've noticed just from a technical standpoint is it did drop pretty significantly at the end of February. There was a big red candle day you saw, and the stock has not managed to gain that back. Even though there hasn't been it doesn't look like there's a lot of selling pressure on it. It just doesn't look like there's been a lot of it just doesn't look like there's a lot of conviction there. I'd be looking at that. That's at a point of around $6.50. I think the investors are going to want to see the stock get over that and make a confirmed close above that before they get really excited. But certainly, this is a company that the drugs that they do have on market are addressing conditions that have a pretty strong addressable market. So.
Good. I think that's a good overview. You're always our biotech person, so I love that you just randomly happened to get the biotech one there, Chris. That's great.
I just randomly, yeah.
Well, I wanted to throw out there really quick. Thank you, David, for the shout out to like and subscribe. I always forget to encourage people, if you've not joined us for MarketBeat Monday before, if you're new here, again, welcome. We're glad to have you here. It is a huge help if you can like and subscribe to MarketBeat. This is my Bridget's Buys thing. I have the wrong graphic up right now, but if you want to hit the subscribe button, like our content, we'd so appreciate it. It means a lot. It helps grow our channel and get some more people in these MarketBeat Monday live streams, and also just is a huge benefit for all of us. So like and subscribe if you haven't done that yet. If you are a regular here, we're glad you're here. All right, Chris, the next one I'm going to have you look at is QS. This is one of David's names that he wanted to look at. So happy to look at that one. And let's get over to Credo, CRDO. What have you learned with that one, Thomas?
Well, right. Credo looks to be setting up for a pretty good rebound right now. It's down 50% from its highs. Analysts are expecting over 150% revenue growth in the upcoming quarter and wider margins, 200% earnings growth. The estimates are rising, so they're pretty optimistic about these results. This is all being driven by data center demand and the data center build out. So it looks pretty good. As far as their price targets go, they're also forecasting 100% upside at the consensus. So this market is forecast to rise and regain its all-time highs, which I think is totally doable given the outlook for data center growth. nobody has backed off their plans. We've only heard more plans be announced. So the data center build out to me is still expanding.
Well, let's talk about this one because I know this one has been really rough for some investors. If they bought in, I think this is one name, Thomas, that you talked about in an individual video we had on a week about a really good name to look at on a dip. And that was when it was first starting to dip in February. And it's even it went lower than that, but it does look at it's had a nice rebound up about almost 7% in the last 5 days. What was behind that drop that we saw? Again, I think when we talked about it, it was right around this stage here in that January, February timeline.
All right. So this is a surging market that's growing on a long-term outlook for data centers. If you look at the chart, you can see the market surged to a high in early 2025, corrected, rebounded back and set another new high, and it's now have pulled back to correct to retest support at that previous high. So to me, this is just a natural market mechanic as it's growing and swelling into this big outlook. So what I'm looking to happen here now is for this market to rebound and move back to those all-time highs and potentially set new ones. And in that instance, this market will probably continue to move higher and continue advancing by another, $100 up to another 100% from that point, just based on how robust the growth outlook is. I mean, we're looking at these data center companies to continue growing at high double-digit rates for many years into the future. This company is going to double and double and double again several times over the next decade. So the volatility is trying to price in that outlook versus what's happening now. So you get these big surges, big highs, big pullbacks, but the next surge is probably going to be just as big and just as robust as the previous ones, move us up to a new high, break us out to a new high, and continue this rally on.
Yeah, Credo is definitely a name that's been super popular that you've been bullish on for a little while. One other thing to pull up about Credo, their earnings report was so good last month. It looks like they had a pretty good beat. And I think that's interesting to see that the chart was down so much at a time when the numbers looked like they were pretty good for this company, right?
Well, right. So one of the things that's happening in the market right now is just a revaluation. People have taken money out of winners to put into other stocks. And so many companies, Credo included, have had their valuations drop down based on their earnings outlook. The companies that are really the most important in this regard are like NVIDIA and the Mag 7, the big tech stocks. NVIDIA is trading on par with the S&P 500. I mean, that's nuts. There's no premium for NVIDIA today. NVIDIA is the source of all things AI. So over time, we're expecting NVIDIA's premium to come back. That's a 50% upside right there because it tends to trade in the 30 to 35 times earnings range. Looking longer term, NVIDIA is trading about 6 times its earnings, which suggests this stock could rise like 400, 500% over the next 10 years just to be on par with the S&P 500 as it grows into that earnings outlook. So, I mean, all of this that we're seeing, all this volatility is just based on this really huge, robust AI earnings outlook, and then just fears about whether or not it's going to happen. And then it gets reinforced by news that says it's going to happen. And I think that's what's going to happen with this upcoming earnings season. And we'll see Credo and all these other stocks continue their uptrends and move on higher.
All right, very good. I'm going to have you look up a crowd favorite. It looks like we have some fans joining us from Turkey, which I think is great. I did see a super chat in there too. I'll have you look up both of these at the same time. So we have RedCat. This is one of my favorite drone stocks too, RCAT. Just take a look at that and give us your quick update there. And then our super chat, again, thank you for that one. It's Grab, G-R-A-B. You're a good one to talk about both of those. So I'll have you look at both of those names and we'll get back to you in a minute. Chris, on to you. We are looking at QS.
We are, and that's QuantumScape, company I'm somewhat familiar with. I haven't looked at it in quite a little bit of time. This is the company they're in the process of, well, I should say still trying to create solid state lithium metal battery technology for EVs and other applications. They've been working on this for quite some time. And I guess that's what I would that's kind of to me where the story kind of starts and ends. There's really been, from what I'm seeing, there's really been no real big news to report in terms of when they're going to have something to deliver commercially. And that's really the headwind on the stock. It's not really, company's not generating any earnings. They're not profitable yet. The technology has a lot of promise. And it's very interesting because it would solve a problem that the lithium-ion batteries have for EVs in terms of the density and the range that I'm not going to get all into it. Like I said, I'm familiar with QuantumScape, but I haven't looked at them for quite a while, and it just looks like the issues are the same. They've got some partnerships, especially one with Volkswagen, but again, there's just I'm not necessarily seeing a timeline for commercialization here that's getting me excited, but.
Yeah, I'm also looking here, Chris, at some of the analyst price targets, and it looks like there's been a couple reduced price target. There was one in November, right. There was an up, but the recent February price targets have all been reductions, which is usually not the greatest news for stocks either, right?
Right, and to be fair, I mean, some of those reductions, it goes back to the consensus is still about 40% above the stock's current price. The stock's current price is $6.30. So. It's a company I've known about for a while, but it's just kind of one of those things that I haven't really checked in on them because there really hasn't seemed to be like anything there that they're moving the ball on the story, and it just doesn't look like that again. Again, not suggesting it's a bad investment. It's just one that you're going to have a lot of conviction on if you're going to be in the stock.
Yeah, perfect. Well, thanks for a quick look at QS. I'm going to have you look up. Let's do BKSY next.
Okay.
And Chatterbox, nice to have you join us. It says you're a first-time viewer. Love to have first-time viewers here. The website that we are looking at is MarketBeat, marketbeat.com. This is a free website that anybody can look at for any stock. So go to MarketBeat, type in the stock ticker in the corner, and you can follow along with us. All right, Thomas, let's go to RedCat.
Right, so we've got a drone stock. From what I can see, it's ramping and scaling its business. It's got a strong order flow, and it's expecting to have pretty strong accelerating growth over the coming quarters. I think one of the headwinds over the last few weeks is that it didn't really provide guidance that was the market was able to sink its teeth into. It was kind of an uncertain outlook. So the market's kind of was concerned about that and pulled back. I think what this does is set us up for the chance for a positive surprise, good news, and that's usually a catalyst for higher stock prices. I think analysts are pretty bullish on this one. Let's see what it says. Right, looking at 60% at the consensus, just under $21. So that would be a new all-time high. To me, if we get up to that level, that extends the uptrend, kind of puts this market onto like a new accelerated trajectory. So we get some good, strong reports coming up. I think that could easily happen by mid-year.
Yeah, this is a name that I have been looking at for a while. We have an internal stock competition at MarketBeat, and this is the one I picked last year. And I think I got it in this little run up right here. I think I added it to my list in September, and it went all the way up to here in October, and then it had this big crash. So the thing, you look at this chart and you just see so much volatility. A company that's had a really bullish ratings, it's had again, people are very excited for it. Why do we continue to see so much volatility in this one?
Well, because it's the reality versus the outlook, and the outlook is really good, but the reality for the last couple of quarters, last couple of years, is that it's been making about $2 or $3 million a quarter. That's not very much. So this past quarter, growth accelerated to 300%. Revenue hit 26 million. We're expecting to see that acceleration continue. So if we keep seeing acceleration, I think that we could easily see this stock price continue or enter a rebound and begin to move higher.
All right, very good. The other one you were looking at was our super chat today, and this is a name that you have been bullish on for a while. You've been talking about Grab for, I don't know, maybe 6 months or a year.
Right, I like Grab, and it's actually had kind of some bad news and some market souring or market sentiment souring news over the last couple of months. Just kind of started with some soft guidance. There have been concerns about past failed mergers and future mergers. It's trying to affect a merger right now. It's kind of been taking a long time to get traction on. There's some concerns about competition, but within all that, I think the long-term outlook on this one is still pretty strong. It's definitely making headway. It's advancing its footprint. It's growing its business. I think that the near term, the concerns are more near term than long term. I think eventually the market will get back into the growth story. It's just going to be a matter of time, I think, for it to get some news that causes it to want to rebound and re-engage with the accumulation.
Yeah, I see that analysts are on board with exactly what you just said. It looks like it had a pretty good earnings report that came out, and you look at those analyst forecasts, and you've got a good upside even on consensus right now. But the recent upgrades that we saw just this year in January especially are outperform and buy and some higher price targets. So it does look like there's plenty of people that are bullish on this company that should be doing maybe better than even what it is right now.
Right. That's true. And looking at the institutional data, they seem to be buying on the dip right now, which is a good sign to me. They also are looking at the long term versus the near term. So they're buying at a pace of 2 to 1. They own more than 55%. So that's certainly helping to provide a support base. Maybe they'll limit downside this quarter. Looking at the chart, that's possible. We're at the bottom now, but no rebound has started yet, so I'd be careful about getting in before we see some real more concrete indications of a bottom.
Yeah, and just for those who don't know, Grab is that kind of like an Amazon, but for international markets, correct? This is really getting outside of the U.S. market.
It's like a ride-hailing company. They help drivers get vehicles and then provide them with a platform for ride-hailing and ride-sharing and delivery. So it's it's kind of like Uber, but more, because they're also helping the drivers get into the cars.
Okay, very good. Well, Thomas, I'm going to have you look at Coreweave next. One of our early viewers wanted to hear about Coreweave, and we haven't talked about that in a while. So we'll get back to the data center space a little bit with Coreweave. Chris, let's look at BKSY.
Yeah. This is Black Sky Technology. That's the ticker symbol BKSY. So this company is a data as a service company. They sell real-time satellite imagery and AI-driven geospatial analytics to their customers, which encompass both government and commercial side. And they've got subscription contracts and non-subscription contracts, I guess you'd call it. So looks like the stock has shot up here in the last week, and I think some of that, although I don't think this is, although this company operates with the satellites and operates in space, I wouldn't necessarily say this company is a true space stock, but it looks like it might be getting a little bit of a halo effect from what's happening with all the space stocks. It looks like it is trying to reclaim that 52-week moving average based on the chart. I think that's the good news. The bad news is it looks like it might be trending into that overbought range. But if it can claim that new 52-week high and it can build the momentum going, that could be a bullish sign. But again, I think it's starting to waver into that overbought territory that investors might want to be careful of. It is over the analyst price target right now. I've noticed that. So, company's not profitable yet. It is generating some revenue, but again, that revenue is in the tens of millions, and so this is still a pretty tiny company in that regard.
Yeah, what do you think? Did you read anything that shows you what was behind that big recent jump? I mean, up 30% in the last month is quite a big jump.
I did see that they were awarded a contract, a $99 million U.S. government contract. So again, I think that's positive news. $99 million is positive news for them, because when you look at just the last, four quarters of earnings, that's going to be pretty much just about that 99 million. So you're getting about a year's worth of earnings. Now they're not getting it all in one shot, but you're still, that's nice support for the stock, which is, I think, the reason why you're seeing that lift in it, because the lift has come right after the announcement of that contract.
Very good. All right, well, a good look at that. And speaking of government contracts, let's go to USAR next. That's what a couple of people asked to hear about that one. So we'll do that. And it looks like we just had another super chat come in. What have we got? So look up USAR and Zena, Z-E-N-A.
Okay.
Look at both of those. All right. Thomas, you are looking at Coreweave. I'm excited to take a look at this one.
Well, right. So this company, this stock appears to be, forming a support base down here around the $85 level as we go into its next earnings report. Right now, the bar is set real low. Analysts have been lowering their targets. It looks like 100% of the analysts that we've been tracking have lowered their targets since the last earnings report. So I'm expecting a pretty significant outperformance. This company is supported by data center demand. All of its competitors are reporting really significant beats, showing significant gains and growth in their footprints and in their long-term revenue and earnings stories. So I expect the same from this company. In that light, I think the upcoming release could be a trigger for a rebound. The chart certainly shows a market that has retreated from its peak to oversold levels and has established a base, is set up to rebound. It just needs a catalyst to drive it.
Yeah, this is one that I've seen a lot of mixed reviews on. I think over the last 3 to 6 months, I've had many different, again, if you are a regular on our channel, we post a video every day of the week, and this is the only live show we do. We have pre-recorded videos that I interview different guests all the time. Chris and Thomas are some of them, but we hear from a lot of different people, and Coreweave has had a lot of mixed reviews, Thomas. We have had a couple of guests on who have said, stay away from Coreweave. The story isn't here to support the growth that the stock has. And then we hear from others who are still bullish on a future outlook for this one. So why the difference in opinion on Coreweave? Why do you think we're hearing some mixed reviews on this one?
Well, it's just this whole AI and AI as a business, as a service is so new, and it's really not even been fully built out. So it's hard for some people to look forward and see the end game. But right now, the demand is there. The demand is strong. They're building data centers as fast as they can, and it seems like they're not building them fast enough. So I really do expect to see that this company will continue to produce strong results and strong forward guidance and continue to align with that original initial long-term outlook.
Yeah, also good to remember with Coreweave, this isn't a new company. It IPO'd just last year, so there's not a huge history, right? It's a very, very new company.
Right.
That's a lot of excitement to begin with. So there's just been volatility, and that's normal with a lot of IPOs, especially anyone related to AI, right?
Exactly.
Yeah.
Well said.
All right, let's get on to a couple of other names. One that's an oldie, AMPX. Apparently, AMPX had a big jump up today. So I'm going to have you talk about that one. And then I want you to talk about AXTI. This is a new one that somebody's put on the chat a few times, but the chart is really interesting. It's up over 3,000% in a year. So take a look at that one. Chris, let's get back to you. We're talking about let's do ZENA first. This is the super chat. I just saw another super chat come in, so we'll get to that too.
Yeah, this is a company, again, I'm not familiar with them, but ZenaTech is the name of the company. Ticker symbol again is ZENA. They offer AI drones and enterprise software, and they provide what would be called drone as a service, subscription or a pay-per-use basis. They have both government and commercial customers. Currently, they have customers in areas like surveying, inspection, security. So they don't require the clients to own or operate the drones themselves. But so it's that drone as a service business. Looking at the analysts are bullish on the company. It's got a $9 price target. It's currently trading at $2.31. So that's analysts see a lot of upside, but it does have a hold, and it should be noted that there's only 2 analysts covering the stock right now, according to MarketBeat. So, or at least that are reporting to MarketBeat. So that's something to be wary about. Stock's been down this year, although it's up in the last week, which I think that's probably not surprising given the conflict with Iran and the idea that there's probably going to be more demand for their services. Looking at the chart here, pretty bearish looking chart right now. It dipped pretty strongly towards the end of last year, and it just doesn't look like it's been gaining that momentum back.
Yeah, I also looked at their earnings here, Chris, and it looks like they had a pretty big miss there as well. And that was, but we've got an earnings report coming up soon, which
right. That's always Yeah, that's always an interesting time to try to sit there and say you're going to try to buy the company around earnings. I mean, yeah, it looks like the earnings are coming up in another couple of days. So, um, very little revenue, not profitable. Chart looks iffy right now. Certainly not a company I'd want to be buying going into earnings, but something you'd want to watch for heading out. Certainly if they post a better than expected number, but not seeing any specific headlines linked to them. So I'm seeing a lot of the drone excitement about the drone and the long-term outlook for the drone sector, but I'm not necessarily seeing anything that's specific to the company.
Yeah. I think that's a good look at this one, Chris. Let's talk about USAR quick before we move back to Thomas. We talked about USAR last week. I know there's been a lot of interest in this whole sector for investors, and there's been so much volatility. Any new news for USAR that's moving the stock this week?
Let's see. We talked about this, we said last week, and I'm looking at it. Looks like they just reported earnings on Tuesday, so it was probably the day after we talked about it. They missed on earnings, so they reported a bigger loss than expected, 19 cents a share loss as opposed to a 12 cents per share loss. Did generate a little bit of revenue, it looks like. That's not really surprising to me, either one of those numbers. This is a company that until they get their mining operations going, it's going to be a little choppy here. But again, I think the overall story for the company hasn't really changed. I mean, this is a company that's operating in an area where we need them, we don't have enough of them, and they're a shot of getting that supply chain into the United States, which is what we need. So I think the long-term case for the company is good as long as you believe that they're going to get their operations up and running.
So short term, it's an entry point for you if you believe in the long-term thesis, or is this, where it's at right now? Is this a good entry point for this stock?
Well, let me look here. Yeah, I think it is. When you start looking at the chart, you start seeing it did a sort of a double bottom around that $12.14 mark, and that was late last year, and it looks like it found support above that level right after earnings. So this may be an area to look for if you're looking to get involved. Sure. Especially given the fact that analysts have a $33 price target on it, and it's trading at $15.28 right now. So, yeah, it looks like this is still a good time to try to get involved.
All right, very good. Well, I'm going to have you look up the next super chat, and this one's different. This is a fund. We're looking at AGTHX. I believe it is the America Funds Growth Fund of America, AGTHX.
Okay, I'll look at it.
Look at that one. Thank you. All right, Thomas, over to AMPX first and then to AXTI.
All right, so AMPX today moved up by about 10%. To me, this move is just a natural move from this critical support level that it was testing. This support level was the prior high. So right now, AMPX is consolidating following that really robust earnings report, followed by a really nice follow-on battery order. So the outlook for this stock is still improving, still very strong. We're kind of where we were like before the last report, except, step forward one cycle to where now we're waiting for the next report to affirm this already good, outlook that's been strengthened. So right now it looks like the market for AMPX is, consolidating, and it's gearing up for its run, which is probably going to take it up to $22 or higher, I would say, on the next big rally.
Yeah, this one has had such a good rally. AMPX has been a good stock for a lot of our viewers who have been following this one. And you've been bullish on this one for a long time too. So it's nice to see that big jump. Right. Your thoughts, I do want to talk about the volatility. I feel like I ask this with everyone, but we saw it move to those new highs and then have that really stark pullback in just such a short amount of time. Why do you think we see that volatility in a company that's, again, had really strong reports, strong guidance, that sort of thing?
Right. It's still early in its development, still early in the story. So we get that good news, and there was a really sharp move higher, presented a really nice opportunity to take profits, and that's why we got the sharp pullback. But now what we're seeing is, support is present at a much higher level, confirming a critical technical level, in alignment with uptrend, in alignment with channeling, in alignment with this market having risen from a lower channel to a higher channel. So right now it's all looking pretty bullish to me. MACD and stochastic are also in alignment with an uptrend and bullish signals, still showing plenty of room for this market to run. So this story to me is still playing out.
All right, very good. Now let's look at this other one, AXTI. I think this is the first time I've looked at this chart anyway. What is this company?
Well, right. So AXT is a semiconductor company. They're making the wafers for advanced high-performance semiconductors, specifically like non-silicone wafers for semiconductors. The one that is really the critical one right now, I think, is, and I'm not a scientist to be able to say this right, it's indium phosphide wafers, and these are used in really super fast, high-performance data center connections. So super critical for the data center build out. So this stock is probably going to be in an uptrend. We're probably going to see accelerating revenue and profitability over the coming quarters. But the problem with the stock price is that the market has moved far in advance of the analysts. Analysts are raising their targets, but this market is above even the high end of the range. So this correction really is the market coming back and touching base with where the analysts think the stock price should be in preparation for the next earnings report, which could trigger another upside.
This is one that is, again, it's interesting that I haven't really seen much of this stock yet. Again, you explained what they did pretty well here, but is this a story of it's such a new company, such a new industry that they're looking at that maybe analysts aren't aware of where it could be going? It's hard to price where this market could be, what the real value is. I think about anytime we see a run up like this so far above what analysts are saying. I think about Palantir and how Palantir was flying high above all analysts' price targets for quite a while. Is this that kind of a story, or is this a true story of the market really getting ahead of itself?
I think that the analysts will grow their estimates into where the market is, but it's going to take some time. This company isn't that young. It's been around for a long time. They've been making chips for a long time, but there hasn't been that much demand for them. I mean, what they need is really like above and beyond what traditional silicon can do. So for the most part, what we've been doing has been handled by traditional wafers, only some small applications. But with the rise of data centers, with the rise of AI, all of a sudden, these wafers are super important. There's going to be really wicked hot demand. And so you see that in the price action. One of the things I noticed with the price action is also a wicked hot increase in volume, which tells me that, yeah, the price action is really volatile. It's moving up really high, but that's because people are buying it. People are owning this stock. And to me, that just kind of says that this story really has some power and some foundation. It'll be long lasting.
Yeah, one other thing I'm noticing, just to point it out, because it's an interesting name to look at. I haven't looked into it before. Only about 50% institutional ownership, but there is a lot of buying this last quarter. It looks like quite a bit of buying. And then the short interest is really relatively low for some of these companies, especially to see such explosive growth. 12% short interest is lower than some others we've looked at, for sure.
Yeah, right. I mean, those shorts were probably selling into the massive rise and seeing how far the market had gotten ahead of itself. So with the institutions buying, I would expect to see some pretty firm signs of support. We already see some signs of support in the charts, just not like a firm bottom. Once we start seeing that bottom kind of highlighted with the candles, the shorts will probably start covering. Then we get another good report. We'll see a short covering rally, possibly a short squeeze. Certainly have potential for higher highs to happen. Just really a matter of time and seeing those earnings reports come in.
One other question, because I'm endlessly curious. When you see a stock like this that has gone up over 3,000% in 1 year, what are your thoughts when you're looking at that? Anytime you look at a stock that's had over 3,000% growth in such a short time frame.
Well, this is one that's for the watch list because this story is still blossoming. This market obviously knows something that I didn't. So I'm going to want to watch it with that volume in play, with the MACD peaks, the extreme peaks, the convergences. I would expect to see this market at least retest its all-time highs, if not set new ones. So if I get a good clean bottom, that I'm pretty confident with, and I see the news story developing, positively, this would absolutely be a buy.
All right. Thank you, Thomas, for looking at that one. I am going to have you, we've had lots of people asking for different ones right now. I'm going to have you do AEHR. Look at that one next, and then I'll get you some more after that. You know what? I'll also have you look at Hims. We've looked at that one many of times, but apparently it had a big jump today. So just a super quick look at that one too. All right, Chris, on to you. We are looking at this fund, which I don't actually think we have on MarketBeat, right? I haven't found much data there.
We do not, but never fear. I've found some information about it. It's an interesting choice. Now, this is going to be a choice for growth investors. Okay, the fund's name is the American Funds Growth Fund of America. Ticker symbol is AGTHX. A few things that I can just speak to about the fund. It's an actively managed fund. So that means that you're going to be, in this case, you're going to be paying a little bit higher of an expense ratio than you might with a fund that's passively managed. But the fund's been around since 1973. It's got an impressive track record in terms of at least providing very consistent growth for its investors. It's geared a lot towards people who are looking for a fund that they might want to hold for a retirement account and things like that. Because again, this is something that you're going to want to hold for the long term. Right now, the fund is heavily weighted in areas like technology, healthcare, communication services. So it's different than, like, let's say the SPY, because the SPY would be more broadly diversified. This is definitely targeting more of those growth companies. It's looking at the cyclical names, the ones that are providing that growth right now. And that's, again, part of the actively managed component to it. It has a multi-manager approach. So it's got different managers getting in here, looking at these stocks, and balancing the portfolio as needed. But, again, it's a core, it can be a core investment holding for growth-oriented investors.
All right, very good. Sorry I didn't have as many visuals for that one, so you just got to hear Chris, but I'm glad that you gave us a quick analysis. Thanks for the super chat on that one too. It's always good to get those so I can actually know which ones to pop out really quick. We had a couple of other people asking about this one. So there's a general consensus to hear more about a couple of mining stocks. There's AG and HL, which are different names in the mining space that I have not covered. So AG, and then a second one, HL.
Okay.
All right, Thomas, let's get over to you. We are going to do AEHR first.
Right. AEHR looks like another specialized semiconductor stock. They're into testing and equipment and services. Seems like they would be in pretty good shape given the onshoring of semiconductor production, the high demand for GPUs and for memory. So in the stock price, it looks pretty bullish. Last few days, we've seen some pretty aggressive advancing. Market is on the brink of setting new highs.
It looks like it did. It looks like it had a 31% jump in just the last 5 days.
Yeah, right. It was up like 17% yesterday or today, and 36% last week. So we're like right in line with the all-time highs. Being driven by results, it looks like. Analysts aren't really on board yet. They're kind of meh on the stock, but it looks like institutions are buying it. So that's probably what's driving the market right now. So just going to be wanting to watch the long-term story develop. And what it looks like is this company is expected to double in the next 2 years and to hit profitability year after next. That would certainly be a trigger. So if we see any developments that align with that story, don't be surprised to see it move to a new high. And then in that case, let's see, 10 to 55. Well, that's pretty solid, 10 to 55. So that's like 45. This stock can get to $100 real easy if we break to a new high.
Yeah, one thing I wanted to point out with those analyst price targets here, there's barely any analyst coverage. There's looks like 5 different analysts that have actually done anything on it that we're tracking at MarketBeat, and only 3 of those are this year. The other ones were late last year, so all of them are very, very recent, very different outlooks on it as well. And so, any reason why analysts aren't really interested in covering this one yet? Is it just too new?
It's just a small company, and without profits, that's probably holding them back. But it seems to be on track to grow and to produce profits. So we may see coverage increasing. In that case, that would be a bullish catalyst for coverage to be increasing.
All right, very good. Let's look at Hims next. We know this one has had a lot of growth recently after the different lawsuits with Novo Nordisk were resolved. What is behind this recent jump up? It looks like up 6% today.
I think this one is still just kind of in reversal after that good news. I don't think that there was any specific catalyst today, but this market is up off its bottom. It's kind of working on closing a gap that formed in February, establishing a support base and getting ready for a move higher. That might come with the next earnings report, potentially with some news that happens before them. They did make their new good deal, so hopefully that will be reflected in some results or some guidance, which is what it's going to take really to get the market back into rebound mode.
All right, very good. I've got 2 more for you. I'm just picking them out because they're different names. ENVX. And then the other one that was newer. Let me see if I can find it again. It might just, TNGX.
TN or TM?
TN. TN, like no, and GX.
You're right.
Okay, so look up those 2. Those will be your last 2. And then, Chris, let's get over to you talking about some mining stocks. Start with AG.
Let's start with AG. So here we're talking about, this is First Majestic Silver. Ticker symbol is AG. So this is a, excuse me, both of these companies are silver miners. Hecla also has a little bit of exposure to gold, but let's just focus on the silver angle for right now. Right now, where you're looking at First Majestic, they are they operate primarily out of Mexico, and that might be, if there's any risk to the stock, that might be it. They had record production last year. Which allowed them to double their dividend. Right now, in this year, 2026, they're pivoting to a margin over volume strategy. So they feel like they've got ample cash reserves. And so what they're doing is they're lowering their production guidance, and they're really trying to focus on high grade, high margin silver. That's an intriguing pivot for them. The stock is down about 17% in the last month. That may be what's creating a buying opportunity in the stock right now, if you believe that the price of silver is ultimately going to be going higher. The case with Hecla, real quick, again, you're talking about silver, but you're talking about exposure in North America, which may be something that investors might be more interested in. Right now, again, very strong revenue growth. Year over year, they're up, I think, 53% from what I saw. It's a company that, as long as that production is going up and they're getting that revenue in, they're also cutting their debt, which is making these companies, which were probably once considered junior miners, both of them now have market caps above 10 billion. So they're rapidly advancing into that large miner stage. Although I still think you'd call these 2 stocks silver miners. Ultimately, they're high risk, they're high reward. It depends on where you feel silver prices are going ultimately. Every investor has to answer that question for themselves.
All right, well, thanks for covering some mining stocks. The last one I want you to look at is RBLX. It sounds like this one's had some volatility, but it also had a pretty good earnings report recently. So we've talked about this maybe once before in MarketBeat Monday, but we'll have you end on RBLX. Okay, Thomas, on to you. 2 different names that I have not seen before, so I'm looking at them for the first time. How about you?
Well, ENVX we've talked about before, maybe not on the channel, but I know that me and Chris have covered it in the past. That's Enovix. They do batteries, silicon anode batteries, similar to Amprius, but they're not quite as far along in their process. They're struggling to get into the commercialization phase. They've got bottlenecks in production, so they don't have quite the support as this other stock does, and you can see that in the stock price. It could be a good play, but right now it's the latecomer to the show. And if you were wanting to make a play on silicone batteries, I think that Amprius is the better choice.
It looks like this one has a lot of short interest too, Thomas. It looks like this one's over 30% short interest and only about 50% institutional ownership. So not that different, I guess, than what AMPX is sitting at right now.
Right. So both very valid plays on this technology. But now that we're seeing the way that they're progressing and they're executing on their strategies, investors that may have been exposed to both of these stocks or waiting to see which one they wanted to get into would have a clear choice, because Enovix is really not performing as well. It's further behind, where Amprius is outperforming and is further ahead.
Another thing I'm noticing here too, that's a good comparison of the two. The analyst price targets on this one, even though it shows a consensus of up 134%, it does look like the trend is quite down. Some of those old outlier, really high estimates aren't anything recent at all. I think the last, they're from last year sometime.
Yeah, the sentiment trend is definitely down. Sentiment is souring. This company it's on the outs compared to Amprius, which has the opposite trend.
Okay, well, let's go on to the other one, TNGX. What is this?
So this is a biopharma. They're focused on cancer. I think what I see is positive analyst sentiment. They've got a new collaboration. The results have been pretty decent, or they're getting better. All leading to an improving outlook, which is all catalysts for stock prices to rise. See here, we have revenue is certainly growing, expected to surge with the next results. We're basically transitioning from a no revenue company to a revenue company, so that brings earnings into play. Profitability by 2030 is not too bad, so this could be a decent one. Right now, the stock price is pretty elevated. It has pulled back some from its highs, but still up pretty good. Let's see what the analyst forecasts are saying.
That's the interesting thing to me, Thomas, is that the stock is up almost 1,500% in the last year, but it's still below that analyst consensus price target, at least a little bit, or right at it.
Right. So this is it's 2% down. So that surge was the market rising up to that level, and now we might have a little bit of volatility as the market gets equilibrium at that level, waiting for whatever's going to happen next. Let's see. Right. So I think that they've got a couple of trials underway, which are expected to be have their results released this year. So those would also be catalysts for this stock. So it looks like a positive play. The market certainly likes it. I wouldn't want to chase this one too high, but certainly on a price pullback, you could do some small entries on this one.
Good. All right, Thomas, that was going to be your last one, but I did just get a big super chat in, so I'm going to have you cover one more really quick. They want to talk about Microvision and Plug Power. It says they bought them under $1. Which one has more potential in the near future? So a quick look at Microvision and Plug. Look at those really quick. I'm going to move on to Chris, and then we'll wrap up.
Yeah.
We normally go to about an hour on MarketBeat Monday. This is maybe the latest I've ever kept Chris and Thomas, so thank you guys for sticking with us. Chris, let's take a look.
Yeah, Roblox, ticker symbol RBLX. Stock's been under a lot of pressure since late last year. It's not. It's in one of those patterns that you're seeing. What you don't want to see as an investor. You're seeing lower highs and higher lows, and it's just the company disappointed on its last earnings call. The revenue was higher year over year, which was nice, but the company reported a larger loss year over year. That's not looking to turn around anytime in the near future. Analysts are a little bit suspect on the company's guidance, which they're basically saying The guidance seems to be overly optimistic based on what the company's current results are showing. Analysts are still bullish on the stock in general, but I do see price targets going down from that consensus of $116. So I'm seeing several price targets going significantly below that. Having said that, some of those targets are still significantly above where the stock is today. It's one of those stocks. It's kind of tough right now. It's just the company's not making money. The revenue is growing, but it just seems like there's going to have to be a lot more revenue growth than maybe the company's capable of producing.
All right, very good, Chris. Okay, Thomas, let's cover this last couple of ones and then we'll be good to go. Microvision and Plug, which one's better for you?
Well, I haven't had a chance to look at Microvision yet, but looking at Plug, it looks to me like this one it's been struggling for a long time. It's alternative energy, it's hydrogen. So the big struggle with this one is cash burn and actually building out the hydrogen infrastructure for it to be able to make hydrogen business. It is making progress, but cash burn is going to be a big, huge problem for the next few years at least. It seems like analyst sentiment downtrend has bottomed. They're kind of in a wait and see mode. So we might see some sideways movement, but I'm not looking for this one to be a big rebounding story right now. If you're interested in the alternative energy, I'd be more interested in Bloom Energy because their systems are more functional. They're being deployed. There's lots of demand. Microvision, let me look at that real fast and see what I can do. Microvision is LiDAR sensors, LiDAR. So that's probably going to be decent just because we're looking at autonomous vehicles coming up pretty soon. They're going to need LiDAR and other kind of sensors. We've got really high short interest. We've got a really tepid revenue outlook. I mean, I think this coming up year, they're topped out at 15 million, which isn't very much. So it's still very early in this company's commercialization and ramping. Let's see, earnings. Expected to have a pretty solid revenue ramp. I don't see any forecast for earnings, so that's not really a good sign. It seems like they're going to be developing their technology for a long time. So maybe this is one that you be cautious with. And if I had to pick one or the other between Plug and Microvision, I might look for a different stock altogether.
So neither one would be one that you would be looking at right now. Is there one that's better for growth in the short term?
Neither chart is telling me that the market's engaged and involved and wants to move this market higher. For a near-term play, if you're looking to do like short-term penny stock tradings, Plug does seem to be moving higher within a trading range. And within that range, I mean, the gains could be significant on a percentage basis, but I think upside is really limited. I think that you're going to top out, maybe $4 or lower, and just be aware of that. If you're going to be doing Plug in the near term, it's absolutely a trade. Buy it low at the bottom of the range, sell it high at the top of the range. If it breaks out, then reevaluate what's going on, and then either buy again on a different thesis or wait for it to fall back into the range.
All right, very good. Thank you guys so much for staying a little bit later today. Again, I'm sorry if I didn't get to all of the stocks. It's nothing personal. I promise. I wish I could get to everyone. And there's no rhyme or reason to the ones I pick sometimes. I always get to the super chats, and then I just try to do ones that I see pop up from multiple different usernames too, just to see if more people are interested or not. Thank you all so much for watching. I so appreciate you being a part of our MarketBeat Monday community. These lives are a lot of fun. We get to look at a lot of different stocks that we don't normally cover. So thanks again for all of the stock tickers today, everyone. I hope you have a great rest of the week, and we'll see you again next week.